Hillary Clinton's hearing on Benghazi has restarted about 45 minutes ago. We are continuing to monitor it for you. In the meantime, Donald Trump told Fox Business he sold all his stocks.
I sold it in January, and the reason I did is I have so little confidence in our government. That's why I sold it.
Because you don't have confidence in the government?
Because I don't have confidence in our government. The people running our government, I don't have confidence in them. And that's why I sold the stock.
This as warnings emerge that investors should move their cash out of the U.S. while they have time. For investors who think they should do it, we bring in MaxFunds.com founder Jonas Max Ferris. So, Jonas, first and foremost, it seems a bit rash to go all in or all out on anything, as Trump seems to be doing. But what if a U.S. investor says, I want to put some money overseas? What's the best spot to do it?
Well, you only would want to go all in, like totally foreign stocks, if everybody was basically in U.S. stocks, kind of like 1999, 2000, and foreign stocks were really cheap. Emerging markets had like single-digit P ratios, and we had like 80 P ratios. Then you would conceivably want to go all in and just go all for. On normal times like today, you want U.S. and foreign stocks. I've personally been increasing foreign stocks over the years because they've been underperforming for so many years. Everybody was saying get out of America.
They're just cheap. It's a good deal.
You actually want to go where the trouble is. In America, there's not a lot of trouble right now. Stocks are getting expensive. We have some booms and bubbles going on in biotech and other areas. They have more problems abroad. And what the analyst from Wells Fargo is saying is that basically they're still going to have to have stimulus that we're not going to have very long in America because they're so far from being right.
As in Europe, the
low
ECB
interest rates, negative interest rates. And you saw that today with the euro was starting to creep up. It already fell last year. And they had to send it back down because they're not competitive with America with an expensive currency. So as it gets beaten down there, you can go into foreign bonds, not emerging market bonds yet, or even emerging market stocks yet. Those countries are in a lot of trouble. But larger, Germany, Europe, France, Italy even, those are places you can own bonds from through ETFs today and mutual funds, not ones that hedge back to the U.S. dollar. You want to have that exposure to the euro.
We'll take the advice. Jonas Max Ferris, thank you very much.